Before we dive in, there's something you need to understand clearly because it completely changes how this works. You cannot directly buy SpaceX stock on SoFi Invest or on any regular public stock brokerage for that matter, because SpaceX is still a privately held company. That means its shares are not listed on the stock market like Apple or Tesla. So if you've been thinking there's a simple search and buy button for SpaceX inside SoFi Invest, that's not how this game works. But here's where it gets interesting, and this is exactly what this guide is about. Even though you can't directly buy SpaceX, there are still ways investors try to get exposure to it through SoFi Invest and similar platforms. Some of these methods are direct in structure but indirect in ownership, and others are more like backdoor exposure through funds that happen to hold private company stakes. So what you're really learning here is not just how to click a button, but how people actually position themselves around private companies like SpaceX in the modern investing world. Let's start from the beginning so it all makes sense. When you open an account with SoFi Invest through SoFi Technologies, what you're actually getting is a brokerage account that mainly gives you access to public stocks, ETFs, and sometimes alternative investment products depending on eligibility and availability. You can easily buy companies like Amazon, Microsoft, or Nvidia, but when it comes to something like SpaceX, it simply doesn't appear in the search bar because there is no public ticker symbol. So the first step in understanding this process is accepting a key limitation. SpaceX is private, and private companies do not trade freely on public exchanges. Their shares are usually held by founders, employees, early investors, and large venture capital firms. Occasionally, a small number of shares change hands in private secondary markets, but those are not something your average retail investor can directly access inside a normal brokerage app. Now, here is where indirect investing comes in. If your goal is exposure to SpaceX through SoFi Invest, the most realistic method is through funds. Some investment funds and ETFs may hold stakes in private companies, either directly or through structured investment vehicles. These are not guaranteed and they change over time, but they represent one of the only legitimate pathways for everyday investors. Inside SoFi Invest, you would typically look for ETFs or managed portfolios that include exposure to aerospace, defense, or venture capital-backed innovation sectors. While these funds do not exclusively own SpaceX, some venture-focused funds in the broader market have historically held private shares or pre-IPO allocations of companies like SpaceX when available. The important detail is that you are not buying SpaceX itself. You are buying a basket of investments where SpaceX might be a small, hidden component depending on the fund structure. Now let's walk through what someone actually does step by step inside the SoFi Invest app, keeping expectations realistic. First, you would open and fund your SoFi Invest account. This part is straightforward. You complete identity verification, link your bank account, and deposit funds. Once that money settles, you are ready to invest in available assets. Next, you would search for exposure rather than the company itself. Instead of typing SpaceX, which will return nothing investable, you would search for themes like aerospace, innovation, space technology, or venture capital ETFs. This is where the mindset shift happens. You are no longer hunting for a single stock. You are building indirect exposure to an ecosystem. At this stage, you might come across ETFs that focus on disruptive innovation or aerospace and defense sectors. Some of these funds sometimes include companies that are connected to SpaceX's supply chain or industry, such as rocket manufacturers, satellite technology firms, or defense contractors. Again, this is indirect exposure, not ownership of SpaceX itself. Now, there is another layer that advanced investors talk about, and that is private market access. Some platforms outside traditional brokerage apps offer access to late-stage private companies through special purpose vehicles or venture funds. However, SoFi Invest itself does not function as a direct gateway to buy pre-IPO SpaceX shares. If someone tells you that you can just buy SpaceX shares on SoFi, That is a misunderstanding of how private equity markets work. So why does SpaceX remain private in the first place? The reason is control and flexibility. Private companies are not required to disclose financials publicly every quarter, and they do not have to answer to public shareholders. For a company like SpaceX, which is heavily focused on long-term projects like Mars missions, Starlink satellite expansion, and rocket reusability systems, staying private allows more freedom to make long-term decisions without short-term market pressure. Because of that, access to SpaceX as an investment is limited to insiders, venture capital firms, and employees who hold equity. Occasionally, early investors sell portions of their shares in secondary markets, but those transactions are typically restricted, high minimum investment, and not available through standard retail platforms. So at this point, you might be wondering what the actual practical takeaway is if your goal is to invest in SpaceX using SoFi Invest. The honest answer is that you are investing around SpaceX, not directly in it. You are building exposure to the space economy, not purchasing shares of the company itself. This includes companies involved in rocket manufacturing, satellite internet infrastructure, aerospace engineering, and defense technology. The idea is that if the space industry grows, companies connected to it may benefit alongside leaders like SpaceX. Now let's zoom out and talk strategy, because this is where most beginners get confused. People often think investing is about finding one perfect company early and getting rich from it. But with private companies like SpaceX, that mindset doesn't work because access is restricted. Instead, professional investors think in terms of ecosystems. They ask questions like, if space travel becomes more commercial, who benefits? If satellite internet expands globally, what industries grow with it? If reusable rockets reduce launch costs, which companies gain demand? This is the kind of thinking that leads you to invest in related public companies and funds instead of chasing direct access that doesn't exist. Inside SoFi Invest, once you identify a suitable ETF or portfolio that aligns with your theme, the actual buying process is simple. You select the investment, choose the amount, review the order, and execute the trade. From that point forward, your returns are tied to the performance of that fund rather than any single private company. It's also important to understand risk here. Because SpaceX is private, any indirect exposure through funds is usually small and diluted. That means even if SpaceX performs extremely well, the impact on your portfolio may be minimal, unless the fund has significant allocation to it, which is rare. On the other hand, you are also protected from single company risk because you are diversified across many holdings. Now, let's talk about something people rarely mention. The hype around getting in early on companies like SpaceX often creates unrealistic expectations. By the time most retail investors even hear about a private company, the early stage gains have already been captured by venture capital firms and insiders who invested years earlier at much lower valuations. So chasing direct exposure at this stage is not just difficult, it is usually impossible through normal investing apps. So what should your mindset be instead? Think long term and think structurally. If you believe in the future of space exploration, satellite internet, and aerospace innovation, then investing in that sector through public markets is your accessible entry point. SoFi Invest gives you the tools to do that easily, but it does not change the underlying structure of private equity markets. One more important clarification is that even when companies like SpaceX eventually go public, which is not guaranteed in the short term, early access is usually offered first to large institutional investors, not retail traders. When the IPO eventually happens, then platforms like SoFi Invest would likely allow you to buy shares like any other public company. But until that day comes, indirect exposure remains the only realistic path. So to bring everything together in a practical mental model, here is what is actually happening when someone says they are investing in SpaceX using SoFi Invest. They are not buying SpaceX stock. They are funding a brokerage account, selecting thematic investments tied to aerospace or innovation, and indirectly participating in the growth of industries that SpaceX is helping to shape. And that distinction matters more than anything else. Because once you understand that, you stop looking for shortcuts that don't exist, and you start building a portfolio based on real market structure instead of speculation. So if you take anything from this, let it be this simple truth. SpaceX is not something you click and buy. It is something you position around. And SoFi Invest is not a direct gateway into private companies. It is a tool for accessing public markets that may or may not benefit from the same long-term trends SpaceX is driving. And once you fully understand that, you are no longer just chasing a name. You are investing with a strategy.